There's a lot of fear surrounding around Apple's earnings that are set to report on February 2nd after the bell, and there is good reason for it. As of this recording, we have yet to hear from the Fed and their rate hike decision, and a hawkish outlook could mean disaster for tech stocks. We're also seeing layoffs in tech all over the place, not to mention we've heard from some tech companies already that haven't even given good guidance, or they haven't given any guidance at all, considering the extreme uncertainty in our economy. So why am I bullish on Apple? Well, in today's video, I'm going to dive into a few reasons as to why, and diving into the charts as well to give you some potential reasons to be optimistic on Apple. So be sure to stick around to the end of the video for that. Heading into this quarter, there are some mixed signals from analysts and other companies around the state of the hardware industry as a whole. PC sales have come down significantly, as we already have heard, and particularly in smartphone shipments as well. Despite the uncertain outlook, there are some key points to keep in mind. First, let's go over the expectations for Q1. Apple is expected to report revenue of $121.67 billion and earnings per share of $1.94 for Q1 of 2023. There is potential for surprises in consumer hardware, especially the iPhone, but the sell side suggests that the diminished expectations imply a beat on hardware, with continued strength in services and software revenue helping to offset the weakness in PC hardware cycle. Smartphones may actually escape the decline in computer hardware due to their low correlation with mining hardware trends. For fiscal year 2023, Apple is expected to deliver revenue of $406.15 billion and a diluted earnings per share of $6.53, which is higher than the consensus estimate of $402.5 billion and 6.17 respectively. And just to give you perspective, that's why I'm laughing, just to give you perspective here and just to know how insane this is, Apple's projected revenue this year is more than the Philippines GDP. Let that sink in. The company is expected to deliver a beat due to better than expected iPhone channel sell-in, stronger contribution from services, and heightened gross margin contribution from in-house silicon. Profitability trends are expected to remain neutral to slightly positive, depending on the extent of any layoffs, of course. We still have yet to hear from them on that. In other news, the recent updates to the iMac and MacBook Pro have been well received, addressing the lagging performance of Intel processors and the need for differentiated hardware with M2 Pro and M2 Max chipset. Intel, poor Intel. That breakup was rough. The decline in consumer PC shipments recently reported by Intel will be revealed in the earnings release, and remains to be seen just how much of this decline is tied to Apple's shift from the x86 ecosystem. Believe it or not, foreign exchange has been a widespread problem, but could also have a positive impact on the quarterly results, according to UBS analyst David Vaught. He suggests that the 10% Forex headwind guide for the December quarter is too conservative, mitigating revenue and EPS, or earnings per share, risk ahead of the earnings release. During the earnings call, the company will likely reference Chinese shipment results, which could be fueled by improved sell-through and product outlook or expansion into new categories. The Mac refresh was much needed, and efforts in the transition into gaming and VR could help mitigate negative sentiment around hardware in this quarter. Analysts and members of the media may raise questions about Apple's plans for layoffs following the earnings release. Remember, Microsoft just laid off 10,000 employees. There could be a minor reduction, perhaps less than 5% of the workforce, but given that the trend of other companies cutting jobs to increase productivity, this could give Apple some added cover for costs. But Apple has a ton of cash on the sideline as well. I'd be surprised to see a layoff at all. The company has been disciplined in managing expenses, and the current market conditions only reinforce the need for cost-saving measures. Apple will likely highlight its strong cash position, which is an absolute ton of money, and how it plans to use the savings from any layoffs, if there are going to be any, to invest in research and development and other initiatives as well to drive growth in the long term. The company's focus on innovation and the strength of its brand will likely reassure investors that the company is well positioned to weather the current market challenges and continue to grow. Overall, while some concerns may be raised, the market is likely to view the earnings release and any potential layoffs as a positive light and as a sign of Apple's commitment to maintaining its competitive edge. But I just don't think a layoff will be the end-all be-all for Apple. We'll see. But as promised, let's take a look at the chart and see what I'm seeing here on Apple and why I actually feel pretty confident about this so far. All right, so what you see here is Apple's weekly chart. And I always like to go to the weekly chart to give myself a nice 30,000-foot view of what's actually happening here. And you can see by this yellow line and this purple line are the 50-day or 50-week and 50 or 200-week moving averages, respectively. I have a couple areas of support and resistance marked here. One in particular that I want to take note of is this $136.50 area. It was a resistance, blasted right through that since the beginning of the year. These last 4 weeks here that you can see represented by these four candles have been pretty significant, especially since it came and bounced right off of that $124 area. We'll call it 125 as the market opened up for the beginning of the year. January 6th was when we saw that bottom, that recent bottom from Apple. It's had a really nice move from around 125 a share, although it came all the way up to this resistance at around 147. And I think that if earnings don't come in well received, we could potentially retest this area at 136.50 that I mentioned earlier was a previous resistance. Now becomes that new support. I think that 136 could be a decent area to consider grabbing some Apple. I just don't anticipate the earnings being so bad that we retest 124. Again, crazier things have happened, and so we shouldn't rule it out completely, but I think it's unlikely. And I think that if there are poor earnings results, the worst I could see it happening, again, objectively speaking, is 136.50. I think that's the spot to watch for. If it breaks below that, obviously the 125 is going to be come back into question, but that's my first stop here if we don't get well received earnings. On the other hand, if earnings are great and there is a positive reaction to earnings, we could see a really nice move. Remember, we saw that for Microsoft despite giving kind of mixed results on their earnings. AMD didn't give guidance at all this year so far, and that stock right now is up almost 9% today after their earnings. So that's going to be very interesting to see the move here. 147, 147.50, we'll call it, is the next resistance for Apple, in my opinion, just based off of this weekly chart. And then we start talking about that 50-week moving average. We've seen this start to kind of curl down to potentially set up some sort of death cross type of situation. I don't think we get there. I think that there is lots of potential to be excited about Apple's earnings this time around, just because things have been so bad and sentiment has been so bad that it almost kind of makes it for a nice contrarian type of trade to take Apple, maybe even before earnings if you're feeling lucky. Of course, that's always a known risk. Don't just go in there all crazy before earnings. But after earnings, I think that's going to be what tells the true story here. 150, I think, is going to be very important area to watch for, just because of that 50-week moving average, and then again at 136. So that's what I'm seeing here on the chart. But the bottom line is, I think that Apple is very much a buy, in my opinion, with limited upside potential, but stability in dividends, growth, and diversification, making it a strong option for mitigating downside risk in the event of any recession or growth slowdown. And look, if there's one or two tech stocks to own, it's going to be Apple, it's going to be Microsoft, in my opinion, and all the other ones are good, but those are the two. If you're going to own two, those are the two, in my opinion. I don't think that there's any reason, even with all of this uncertainty, to shy away from it. Did it get ahead of itself, much like a lot of the other tech stocks did over the last 2 years? Yeah, of course it did, but not so much so that I would think about selling it. In fact, I think this is a stock that is just about anyone could retire on. This is how confident I am in Apple this week, this year, and in the next 20 years. But let me know what you think about Apple stock in the comments. If you're bearish on this, why are you so skeptical? What's got you thinking that Apple should be something to shy away from? Let me know in the comments, guys. And as always, be sure to hit that notification bell, as I'll be live to react to Apple's earnings at 3:45 p.m. Eastern time on February 2nd after the bell. So you're not going to want to miss it. Make sure you're subscribed, hit that notification bell. And guys, tell someone you love them. Be safe. See ya.